flow. What are your thoughts on that, and what would that look like from your opinion?
Yeah, so it's an interesting question, right? I think that cash flow from an investing standpoint is very oftentimes overlooked. People do not place enough emphasis on the cash flow that their investments are going to generate. So cash flow is just simply a replacement of active income. So most people are trading their time for money, right? Through their W-2 job, they're self-employed, whatever the case may be. So if somebody has $5,000 worth of expenses, they can become financially free if they create $5,000 worth of passive cash flow, right? That would cover all of their expenses. That person would then no longer need to trade their time working for a boss that they hate or a job that they despise or does not fulfill them. And then they can take their time and go and invest that in something that they're passionate about or that they like doing. Or they could go hang out at the beach for 2 months and figure out what their next plans are going to be, right? But the cash flow that is coming in is just another form of income. So if I invest in a stock that does not pay dividends, I have no cash flow from that investment. What that means is I need that investment to go up in value, and I need to sell when it's high in order to realize any gains. I own rental property. I'm not advocating this, but some of my portfolio of rental properties are in a neighborhood that I don't expect to ever go up in value. It can go down in value for all I care, because those rental units spit off cash flow for me every single month. I don't give a shit about the appreciation because my plan is to never sell those properties, right?
Yeah,
Does that make sense?
Yeah, that makes sense. So you mentioned slightly stocks and stocks with dividends and how it can compare to real estate. Can you speak a little more on that, what your experience has been so far?
Sure. So stocks, there is the potential to invest in a stock that provides dividends, right? There's plenty of stocks out there that provide dividends. Now, one of the challenges with that is that companies can decide to freeze dividends. Their financial situation can change. You can buy something that has dividends today, and in 3 years they may not have dividends anymore. So if you're not receiving dividends from a stock, you are literally just banking on the value of that stock going up. Okay? My dad had a ton of money in his retirement plan. It was all in the stock market. And he had been intending on retiring around like 2015, right? When the Great Recession happened, he lost like 40% of the value of his entire portfolio, which then meant that he needed to wait for that to go back up in order to not be in a negative position, right? So the difference between real estate is that real estate does generate cash flow if you're buying it correctly. And so if the market were to turn down, you can more easily wait for values to increase because you're still making money off of your rental properties, right? So my dad, in essence, had to work longer than he really wanted to allow for those stocks to come back.
Got it. That makes sense. So I think I know the answer to this one, but what would you tell somebody who's invested in Bitcoin, Ethereum, Dogecoin, and different cryptocurrencies such as those?
So I love cryptocurrency. I don't have the bulk of my portfolio in cryptocurrency. I have like a little bit in cryptocurrency. I do think that cryptocurrency could be a major disruptor. Do I think that in 5 years we're going to be using Dogecoin to buy coffee at Starbucks? I have no idea. But so here's the cool thing, in my opinion, about real estate. So if cryptocurrency winds up becoming the currency of the future, by owning real estate, what are my tenants going to pay me in? They're going to pay me in the cryptocurrency that wins that battle and actually becomes money.
That's a good point.
Versus the person who is buying up 87 different cryptocurrencies because there's 1,000 of them, thinking that that's the one that's going to become money. That's still a gamble, right? As many people as believe that cryptocurrency and Bitcoin are going to become money or is the new gold, right? There's as many people that think that it holds zero value. So cryptocurrency could go to the moon, it could go to zero. I think it's fun to gamble in cryptocurrency. It's kind of like going and throwing $100 on black at the roulette table, right? You could win, you could lose, but I'm not banking my financial future and the future of my family's finances on that sort of a gamble.
Yeah.
Does that make sense?
That makes perfect sense. And another thing that you've taught me a lot is about the tax benefits when it comes to real estate versus other investments. Can you share a little bit about what that looks like?
So this is the, I think, most widely misunderstood and factor that people do not take into consideration when they're looking at various investments. So real estate provides crazy tax benefits. So what most people don't realize, like Donald Trump, right? Everybody was like up in arms. Oh, Trump only paid X amount in taxes. Now I haven't looked at his books, okay? So let me preface this statement by saying that. He most likely didn't break the law and evade taxes. He'd have to be pretty fucking stupid to do that as the president, right? Like, he obviously knows he's gonna be under scrutiny. But as a business owner and as a real estate investor, we are engaging in certain activities that stimulate the economy, that provide people jobs, that provide people housing. So the IRS tax code is actually written to incentivize certain behaviors. They want private citizens creating businesses, creating jobs, stimulating the economy. They want real estate investors buying and providing housing for other people. So what they do is they incentivize via tax breaks and ways that you can lower your taxable income through these different sorts of activities. So there's something known as depreciation that you can utilize as a real estate investor to lower your taxable income. So real estate depreciates over either 27 and a half years or 39 years, depending on the piece of real estate that you own. So in essence, what you're able to do is the value of the property on paper is losing value every single year. Whereas in the market, the property's increasing in value, right? So every single year I can apply depreciation, which is a paper loss. If I own rental properties, I'm collecting passive income from my tenants, but I have a paper loss due to the depreciation, a decrease in value. So I can take that and I can use that to offset my gains. You're taxed on your total net income, right? Your total income. So if I can take a paper loss and apply it towards gross income and lower that amount, I'm legally paying less money in taxes. There's different ways that you can kind of play within the system that's been created by the IRS and pay less taxes legally. Super, super, super powerful for entrepreneurs and people that own a lot of real estate.
So I think another thing you told me is that also if you have a mortgage on a property, that part of that would be a tax write-off as well. Can you speak on that a little bit?
Yeah, so the interest that you wind up paying is also a write-off. And then as a business owner, there's different things that are considered a business expense that you can write off too. So for instance, I am flying to Florida to go look at a piece of real estate. That is a expense that I take for my business, which is that of owning real estate, right? So I can actually take that expense and use that expense to lower my taxable income at the end of the year. That flight to Florida, the food that I consume when I'm in Florida, the lodging. Now this is assuming, of course, that this is actually a business trip, right? If you try to game the system and you're just taking vacations and calling it, a business expense, you're liable to get busted sooner or later or get caught sooner or later. But if you go on vacation and you just so happen to do some business while you're on vacation, say you're in St. Bart's and you just so happen to go look at a bunch of real estate while you're in St. Bart's, then you could write off part of that trip as a business expense.
Got it.